Ethereum has been called many things. The next Bitcoin, a useful protocol with no real value, a scam. But I've never invested in Ethereum outside of a short experiment where I made my own NFT. So I wanted to dive into both the bulls and bears case for Ethereum. This first video is going to focus entirely on the bull case for Ethereum, laying out what I think is the most convincing argument for why Ethereum could become worth as much as $40,000 in the future. In a few days, I will then release another video presenting the bear case for Ethereum. So hopefully between those two videos, you can get a pretty good idea of the arguments on both sides. But before we get too far ahead of ourselves, hey, welcome to FinTech. We talk about stocks, technology, and technology stocks. And over the past 2 years, I have more than doubled the value of my stock portfolio, mainly by investing in high growth cloud stocks. But I have not invested in cryptocurrencies up until this point. So in this video, I'm going to go over exactly what Ethereum is, what differentiates it from other cryptocurrencies, and what gives it value. And finally, try to set a value for what Ethereum is actually worth, hopefully giving us some insight into its future price. So hit the like button and subscribe if you want, and let's dive into what Ethereum actually is. So Ethereum is, at some level, just another cryptocurrency like Bitcoin or Dogecoin. It runs on a decentralized blockchain, which means that no one organization can control it or the transactions that are made on the network. But if that was all Ethereum did, it would just be a copy of Bitcoin, the original cryptocurrency. But in reality, Ethereum can do a lot more than just act as a currency. Multiple other applications and assets are built on top of the Ethereum network, including NFTs and other decentralized apps or dApps, ranging from games to collectibles. This greater flexibility in the chain makes Ethereum useful for other applications that use the blockchain, differentiating it from other pure cryptocurrencies like Bitcoin. But let's start out by ignoring those other benefits, and we'll get back to those later, but let's start out by first talking purely about Ethereum's financial benefits. One of the reasons Ethereum can be so hard to get your head wrapped around it is because it can effectively act like 3 different types of assets at the same time, as explained by Ryan Sean Adams, the founder of Mythos Capital. He says that right now, most economic networks on the world stage are nation states, the US economy, the European economy, the Chinese economy. Ethereum is an economy, but without a nation state. So the first type of asset that Ethereum can behave like is when it's used in a staking contract, and in that case it acts like a capital asset, similar to a treasury bill. When you stake Ethereum, you receive some amount of interest back on the asset that you're staking. Now this is still an evolving part of the Ethereum ecosystem, but as Ethereum potentially moves toward a proof of stake model rather than the traditional blockchain model, this may become key to Ethereum's future. And we'll talk more about the proof of stake model a little bit later in the video. Second, Ether is the required currency to pay for gas in the Ethereum economy. It's similar to how the US dollar is required to pay taxes for the security and infrastructure of the US economy, and as the Ethereum economy grows, the demand for Ether grows as well. When I minted my own NFT on the Ethereum network, I had to pay to do so. And because I was doing all this within the Ethereum economy, I had to pay in Ethereum. So then the third financial instrument that Ether can act as. Third, when locked in a collateralized loan or lent out for interest or stored in a savings account, Ether acts as money, like US dollar. As the Ethereum economy increases in size and fluence, and as Ether is increasingly used as money, there's monetary premium increases associated with that. Adams then goes on to say that while the first and second use cases outlined above drive demand, it's likely the third that will be the most significant value driver for Ether by far. Just as the use of US dollars as money is the primary reason USD is valuable relative to other currencies. So if I'm a bank and you come to me asking for a loan, the reason that I'm willing to give you money is because you're going to pay me interest back on the loan, which means that I place value on the interest that you can pay me back. By doing this, I am assigning value to the future money that's going to come back to me as a loan. And that works for US dollars, and theoretically it would work the same way for Ether. So to summarize Adams's points, Ethereum is not just a non-sovereign currency. It's a completely non-sovereign economy. And Ether as a financial instrument can play different roles depending on what situation it's being used in. So because of that, thinking of Ethereum purely as a replacement for the dollar really sells it short. It's more of a replacement for the entire financial system. But while that's all well and good and shows that Ethereum can theoretically have value outside of people just speculating on its price, it doesn't show us what Ethereum's value should be. US dollars, for example, used to be pegged to gold. US dollars today is pegged to the US economy, which, while harder to value, at least has something concrete behind it. What's the equivalent for Ethereum that we can use to try to determine its value? Well, one of the better explanations that I've heard in terms of trying to value Ethereum comes from an analyst from ARK Invest named James Wang. So to first give some background on who this guy is, James Wang worked for 9 years as a product manager at NVIDIA, and his background is actually a degree in computer science. He then worked for 6 years as an analyst for ARK Invest. This gives him a somewhat unique position in being able to understand both the technical side of Ethereum as well as the financial side. A few months ago, he did a 2-hour live stream where he offered thoughts on how to deal with Ethereum pullbacks, talked about some of the different stocks in ARK's portfolio, but most important for us, he offered some thoughts on how you might go about valuing Ethereum, and he said this.
Over the last 2 years or so, 2 use cases actually have emerged for Ethereum. One is this thing called decentralized finance, or what people call DeFi, basically using Ethereum to do things that banks used to do, borrowing, lending, and things like that. The other one is NFTs, non-fungible tokens, where essentially any artist now has a piece of magical software that allows them to mint unique and scarce digital assets. We could never create scarce digital assets prior to, practically speaking, Ethereum's kind of NFT technology. So now we have these 2 things. If you try to value Ethereum 3 years ago, you couldn't have come up with any of these because you wouldn't have known ahead of time that they were going to be invented. So narrowly speaking, you could value Ethereum's opportunity in terms of the scale of the financial system if you just look at DeFi, and that's roughly speaking about $3 trillion a year. That's the amount the global banking and auditing system it generates per year, about $3 trillion. But yeah, basically it's if you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether. And that's a 20x from where we are today. So that's very clear. And that's only one use case, right? And because it's a platform, it can 6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
So what James did there was peg Ethereum to the value of something that we already know the value of, the financial system. And he essentially said that if we could capture just 1% of the current financial system using Ethereum, that would be the equivalent of around $30 billion in transactions every year. From there, he makes the admitted assumption that all of that value would transfer into Ethereum, but if it did do so, the coin would be worth $40,000. But that being said, DeFi, or decentralized finance, is only one potential use case for this blockchain, and it may not even be the biggest one. NFTs are the other big use case out there right now, and they may have the potential to get even bigger than the DeFi market, simply because they could capture a bigger percentage of the collectibles market. Imagine if when you bought and sold art, rather than transferring a physical piece of paper that essentially says you have ownership over it, you instead used an NFT representation of that same piece of art. This way you could take that piece of art and loan it out to a museum, and even though that museum would have physical possession of the piece of art, you have a digital immutable asset that says you own that art in the first place. So as its value goes up, you can still gain the benefit of that. This is an example of moving something over from the traditional economy and into the Ethereum economy. But even then, we might still be selling Ethereum short. The real power of Ethereum over something like Bitcoin is its dynamic. It's an entire platform that you can build new ideas and applications on top of. The simplest way to illustrate this is through dApps, or decentralized apps. These are apps that are run on top of the public blockchain, meaning that no sovereign authority can really control them. Remember the mobile app boom back in the early 2010s, or even the website boom in the 2000s, when you had millionaires or even billionaires being minted off the backs of relatively simple applications like Twitter or Uber? Well, imagine building Twitter for the blockchain, where you can send out messages to anybody on the blockchain, and nobody can modify those messages, not even governments and not even the creators of the apps themselves. This is becoming even more relevant today as we see a lot of big tech companies starting to censor their own platforms in certain places such as China, whereas on a dApp, the creator wouldn't even have a choice. So what's the value of an app ecosystem? Well, think about all the companies that have sprouted up over the past 2 decades that are essentially just apps. Facebook, Twitter, LinkedIn, Instagram, YouTube, TikTok. All of these are essentially just applications that have become entire companies. and all of those could theoretically run on the blockchain. Now, we have not yet seen the full boom in dApps that is likely going to come at some point in the future. And when that boom does come, if it's anywhere near the size of the boom that we saw in mobile gaming or the boom that we saw in website design before that, you're going to have so many billionaires and millionaires minted that they're basically a dime a dozen. Well, if Adams is right and all that value is actually captured by the Ethereum economy, that could be trillions or even tens of trillions of dollars all captured into Ethereum. For context, as I'm filming this, Bitcoin is sitting at a total valuation of $817 billion, which is more than Ethereum's worth today, but it's also just a small piece of what the entire dApps market could be worth, let's say 10 years from now. Now, one very valid criticism that people have levered at both Ethereum and other cryptocurrencies in general is their environmental impact. See, these blockchains take a lot of energy to run, and that energy has to come from somewhere. Ethereum hit a peak usage of 51 terawatt hours at one point this year, which for context would equal about 1/2 of the United States' entire solar capacity currently. Luckily, Ethereum has a potential solution for this: the proof of stake model. The traditional way to process blockchain transactions is when a transaction is made, it's processed by miners who push that information out to every single ledger across the entire world so that everybody has an updated list of what transactions have taken place. This makes it essentially impossible to fake a transaction because everybody else's ledgers wouldn't match up with your own. The problem is, pushing out that kind of data across the entire world takes a massive amount of power. The solution to this is to shrink the pool of ledgers that need to be updated, selecting only users who already have a proof of stake. Essentially, certain individuals would have to put 32 Ethereum into a pot, and then those individuals would have the right to verify transactions. If one of those people was proven to be faking transactions, they would lose the Ethereum that they had staked. This effectively creates a subclass of people who are in charge of verifying the transactions. And while there is still a distributed network, it's a much smaller network than the entire Ethereum network, saving a ton of energy. This, in my opinion, is another way that Ethereum is superior to Bitcoin. Now, Ethereum is still extremely volatile. Over the past year, it went up 1,800%, and then just in the past month, it's already dropped 40% from that all-time high. Because of that, short-term investing in cryptos, even after you might have seen the most convincing argument in the world over why it's a good short-term investment, is probably a bad idea. Many of the possibilities that I talked about that could give Ethereum value might take several years to play out, and it's really hard to nail down an exact timeline for when they could happen. Realistically, in my opinion, if you're going to invest in Ethereum, the only winning strategy is to hodl. But will I personally be buying Ethereum? Well, in order to find out, you're going to need to watch the second video in this series where I talk about the bear case for Ethereum so we can get a full view of the pros and cons of investing in this asset. But if you do want to invest in Ethereum, you can now do so on WeBull. And when you sign up for WeBull and deposit $100 or more, they'll give you 2 free stocks valued up all the way to $1,600. Don't forget to like and subscribe, and I'll see you next time.